Hey traders. Hey, I want to touch on this 15-minute cycle. I talked about it a little bit last week, but I want to show you today. Now look, these ranges have been small in S&Ps, right? Everyone keeps bringing up the fact that we haven't had how many ever days without a 1% move. And that's fine, but what I want to show you guys is when you start to learn and you can actually stick with the process of just following a 15-minute cycle on, there's lots of different types of cycles. You can use different indicators to kind of follow them. I would say most of the indicators, people kind of lose the concept of time within these indicators. I don't think, I just think in general, the trading community is really never, it's always been about price. So I think as we progress a little bit, we need to actually focus more on time. So that's why I'm always really stress the cycles. But I want to show you guys this 15-minute cycle and how you can use it, because I don't know, I just get tired of a lot of traders when they get too wrapped up in trying to figure out what the market pattern is, and okay, it's just they're going to sell them off. You just buy them, buy them, buy them, buy them, and they're going to come ripping right back on you, and that's been the pattern. So that's what's supposed to happen. And granted, that's what's been going on, but that's not a model or a process, guys. If you're just saying, oh well, the pattern that's been going on the last 2 weeks is they sell them off and then rally them back, in lunchtime or into the close, so just buy them blindly on every dip. That's just not, that doesn't work. I mean, it's going to work for a little bit, and then it's going to go 15 handles against you, and then you're going to have your biggest losses. That just you're gonna have 2, 3, 5 handles in the win column, and then you're gonna get run over, and you're gonna get run over on size at the lows. So you gotta have more of an art to your scaling in. You need to know how to time it better than that. All right. So just in the last week or so, all right. If you go to a 15-minute chart and use this 5 and 3 setting, right? 10 and 10 is usually what a lot of different trading platforms will default to. And I think it's too wide between the percent %D and the percent %K. It's too slow. All right, this 5-3 setting, um, it's much cleaner when they cross. All right, so I want to look at, here's a 15-minute S&Ps. I guess this was after Friday, so this was late in the day. But when you get lower than the cycle, you can just simply wait for this to cross before you take your long. So if you have a strong rally up like this, the bulls build a nice wall. All right, the market's probably going to hold about halfway when you have a move like this. And that's pretty much what happened. It retraced about halfway, 50%. Nothing's absolute, but right there at the 30 that's then rising, you get a higher low. So you can let this come back to you instead of just guessing. All right, just let this come down, and as soon as it crosses, you can buy. All right, and this kept ascending this cycle all the way up here till finally price turned the corner also. But even here, when we crossed again, I mean, these lows weren't taken out, and then you get your rally. So this one wasn't as impressive. All right, let's just look at this one. I haven't even looked at these. 15-minute. Okay, you're lower than the cycle when it starts to cross. If you go to work buying then, with your size at least, I'm not saying you can't buy here and buy another piece here, but if you're just blindly buying because you have the mentality that they're just going to rally them back, first of all, your average is going to be terrible, more than likely, unless if you can buy 1, 2, 3, 4 lots and then get long another 10 to 15 down here, you're going to have a hard time keeping your average low. That's why a lot of people struggle when they try to trade contrarian, is they lose track of that average cost is way too above the market. So I'm just showing you the way to wait for this to cross, and then you can start to go to work on your size. And you can even drill down into a 1 minute or 5 minute, all right, and then use the setups, kind of things that I teach in my model. So then when you go back to this next dip we had recently. I actually traded the S&Ps this day, right? If you came in the morning and wanted to play the short side, this move down was basically this. It was captured the entire move down in the morning, crosses right here, all right, and that was your run up. And you could have gotten out right here. You just keep it simple, but use this as a barometer for time, for when you want to time your entry and exits, or at least on the majority of your size. You're gonna have such better results. You're gonna save yourself all the agony of being too early. All right, and then here again today. I mean, again, if you came in early, well, this was late morning. I was trading London today, so at 8:30 here you had a cross. All right, 2182. You got 4 points there, 4 or 5 points. Cycle crosses here again. This was the move you want to capture. So I mean, the majority of time when I'm trading treasuries or I'm trading FX, I'm just trying to capture these 15-minute cycles when I'm day trading with the trend, right? And then here's your next up cycle. Cross here. You made a lower low there after that cross, but you did it right into pi, all right? And the cycle was still positive. So just because the cycle is still up in your favor and price goes a little bit lower, you should use that as an opportunity to buy a little bit more, especially if it's rising. You have a rising pi cycle, you have a trend that's been in place, both intermediate and long term. All right, so this was an up cycle. You know, and you get into here, this area, you want to be punching some out. All right, so this is fractal, guys. This happens in all markets and all time frames. I'm not saying this is the stochastic is the magic, the holy grail. That's not. You're missing the point. I'm showing you how to measure time and look at the oscillations within time to help pick some of this off. Today in oil, all right, there's your cross. Here's your day trade trend down. Boom. Crosses back up. You bounced into here. If you bought the cross here, you sold it there, you made money. Oil back down again, crosses here. I mean, it's just beautiful. Long bonds. I haven't looked at any of this stuff. I just know it's there. Today was pretty choppy. Yeah, this was in an uptrend. So when you're in an uptrend like this, just be patient and pick your spots. So here you're really low within the cycle, 445. All right. So if you nibbled there, you bought some more here. I mean, it never looked back. You can trail this out and make money there. You know, even if you were in here and out here, I mean, this is pretty early in the morning. But sometimes it's better to stick with the process. All right. Crosses here. Combines 170.24, and it just went sideways all day. But I don't know if you want to consider this a cross back through or not. It kind of did poke through and came back. So between here and here, I mean, that was the most of the move. That's all that price did, but it still did move incrementally higher. I don't know what else was moving today. It's kind of slow. The euro is pretty choppy. It's just stuck in this range, right? So you're within the context of this uptrend. You could also play it on the short side, though, or kind of high within the longer term range. You get up towards the top of the cycle, you sell here. Between here and here, I captured a pretty decent little trend, intraday trend. From here to here was weak. Nothing happened. And you gotta jump around the Fed speakers, or if this was Carney, I don't remember. Um, I think you guys get the point. I mean, this is the downtrend in pound yen I've been playing. Alright, so just look at it on the 15-minute. Cycle up. Here, let me remove this. You get up here, short. You're trying to pull out 20, 30 pips. Same thing up here. You get high within the range, you start to cross. And then this is the move you want to try to capture and cover into the bottom of the range. Alright? Here, move back down. You get in over here. That kind of got you in. I mean, you could trail this all the way down, and then you get a nice flush. I was in Tokyo last night. Anyway, guys, that's the power of the cycle. If you guys are new, visit the site, jenkinsrm.com. RM's Risk Management, jenkinsrm.com. So we're building a network of professional independent traders, and it's free to join. So whether you're trading Forex, whether you're trading, I was a bond guy for almost 10 years, and then was trading equity options before that. So we have a lot of different traders from all over the world. So check out the site. It's a Slack powered room. It's great technology. I don't know if probably a decent amount of people are using Slack now, different companies, but it works well. I think that's pretty much it for today, guys. I'll be up early in the morning trading London again for those that want to join. And other than that, have a good rest of your night. We'll talk to you in the morning.